Take a look at this chart. It shows us what happens when a currency collapses. Between 2015 and 2025, the Turkish lira fell by 94% against the US dollar. In Argentina, the story is even more extreme. The peso crashed by 99% relative to the US dollar. The Turkish and Argentinian populations lost all of their purchasing power by holding their local currencies. Bitcoin, however, acted like a life raft. This is what Bitcoin's chart looks like priced in lira. It rose 650,000% since 2015. And this is what it looks like in pesos. It rose by over 5 million%. Now, what if I told you that the US dollar currency was also facing significant risks today? In just the past 100 days, the US dollar index has fallen by more than 8%. Since Bitcoin was born in 2009, this kind of move on the US dollar has only happened 5 times. But unlike past declines, this recent drop in the dollar feels different and potentially more serious. It's not just another short-term correction or reaction to temporary market noise. This time, it's happening alongside deeper structural concerns, like rising debt, geopolitical tensions, and growing distrust in the US financial system. In a world where the dollar loses its dominance, Bitcoin could take on an entirely new role. Now, unless you've been off the grid, you might already have some idea of why this US dollar decline is different. And Trump is back in the spotlight, and he's made it very clear that he wants a weaker dollar.
He wants to crash the dollar.
Whether through tariffs, trade threats, or currency pressure, weakening the dollar has become a core part of his playbook. Now, you might be wondering why Trump would want a weaker dollar. Well, in Trump's playbook, a strong dollar may sound patriotic, but a weaker one wins trade wars. A weaker dollar makes US exports more competitive, boosts manufacturing, and fits perfectly with his America First agenda. It's a strategy aimed at bringing back jobs to America, reducing trade deficits, and pressuring US companies to produce at home instead of relying on global supply chains. And if Trump gets his way, the dollar weakness could become a long-term theme. Now here's what's really concerning if the dollar weakness actually persists in the long term. When the world's largest economy deliberately weakens its currency, it sends a message that the US dollar may no longer be the unshakable pillar it once was. And that loss of confidence is already starting to show. According to the International Monetary Fund, or the IMF for short, the dollar's share of global foreign exchange reserves has dropped from 66% in 2016 to just 57% today. That's not just a data point. It's a signal that central banks around the world are slowly diversifying away from the dollar.